You miss a few mortgage payments, ask for forbearance, breathe for a second, and then the real shock hits. A lot of homeowners think forbearance is the safety net, but the truth is, the wrong belief at the wrong moment can cost you real money, wreck your credit, or even put your home at risk. And one myth in particular tricks people into waiting way too long. We will get to that one soon. Number 1. Forbearance is not free money. Mortgage forbearance is not your lender saying, "Do not worry about it." It is usually a temporary pause or reduction in payments during a hardship. The money is still owed later. That's the part many people miss. They hear pause and think forgiven. Big mistake. Imagine Sarah loses hours at work for 3 months. Her servicer gives her forbearance. She feels relieved. But when the plan ends, those skipped payments still need a solution. The bill did not disappear, it only moved. Number 2, you usually do not have to pay it all back at once. This is one of the biggest myths. Many beginners think the day forbearance ends, the bank will demand one giant lump sum. For most loans, that's not the only path. There may be other options, like a repayment plan, payment deferral, partial claim, or loan modification. That matters because fear makes people freeze. They stop answering calls, they avoid opening letters. Then they miss better options that could have saved them money and stress. Number 3, waiting makes things worse. A lot of homeowners think, "I'll deal with this later when things calm down." But mortgage problems usually get more expensive when you wait. Late communication can shrink your options. It can also push fees, stress, and foreclosure risk higher.
Picture Mike. He knows money is tight in April, but he waits until July to call. By then, he is behind, scared, and harder to help. Calling early often gives you more time and more choices. Number 4, your servicer is not automatically your enemy. Some people treat every call from the servicer like a trap. That fear can cost them. Your servicer is the company that collects your payment, and they are usually the first place to ask about hardship options. You still need to read carefully and ask questions, but silence is usually worse than contact. Think of it like this. If your car starts making a horrible sound, ignoring the mechanic does not protect you. It usually just makes the repair bill bigger. Number 5, forbearance does not fix the root problem. Forbearance can buy time. It does not magically fix a budget that no longer works. If your income dropped for a short time, great, it may help. But if your payment is still too high after the hardship ends, you may need a longer-term solution. That is why smart homeowners use forbearance time to look at cash flow, job income, emergency costs, and next steps. The pause is not the finish line. It is the breathing room before the real plan. Number 6, different loan types can lead to different options. Not every mortgage works the same way. FHA, conventional, VA, and other loan types may have different repayment tools after forbearance. Some borrowers may qualify for a payment deferral. Others may see a partial claim or a modification. This is why copying your cousin's mortgage story can backfire. What worked for him may not match your loan at all. Number 7, a lower payment today can mean costs later. Some homeowners focus only on this month. That is understandable, but you also need to ask what the long-term trade-off is. Does your loan term get longer? Does unpaid interest continue in some situations? Does a new solution change what you owe later? Temporary relief can still be the right move. You just do not want surprises. Number 8, missing documents can slow everything down. Another costly myth is thinking, "I already told them my situation, that should be enough." Sometimes it is not. You may need income details, hardship explanations, bank statements, or other paperwork depending on the option. A delay of a few days can turn into weeks when documents go missing, and weeks matter when your home is on the line. Number 9, verbal promises are not enough. If you speak with your servicer, take notes, get names, save letters, check your online account. Ask when the agreement starts, when it ends, and what happens next. A lot of stress comes from confusion, not just money. When people assume they're protected but never confirm the details, they can miss deadlines without realizing it. Number 10. Forbearance is not the same as forgiveness. This sounds obvious, but it tricks people all the time. Forgiveness means the debt is erased. Forbearance usually means payment is delayed or reduced for a while. Those are not the same thing at all. Think of it like hitting pause on a movie. The ending is still there, you just haven't reached it yet. Number 11. Credit impact is not always simple. Some homeowners think forbearance automatically destroys their credit. Others think it can never affect them in any way. Real life is more complicated. The impact can depend on the loan, the reporting, the agreement, and whether the account is handled correctly.
That is why you should not guess. Watch your statements, read notices, and if something looks wrong, address it fast. Number 12. Scammers love confused homeowners. When people are scared, they become easier targets. Someone may promise to save your house fast for a big upfront fee. Another person may claim they can unlock a secret government program. Be careful. Real help does not need fake urgency and wild promises. If someone tells you to stop talking to your servicer and pay them instead, that is a giant red flag. Number 13. A HUD-approved housing counselor can be a huge help. A lot of beginners think they have to figure this out alone. They do not. HUD-approved housing counselors can help borrowers understand options and avoid foreclosure. For someone overwhelmed by mortgage language, that guidance can be priceless. Number 14. The end of forbearance is not the end of your choices. Many people think once the forbearance clock runs out, the game is over. Not necessarily. Some borrowers may still be reviewed for other home retention options if they cannot just jump back into normal payments. That is why the end date should trigger action, not panic. Ask what comes next before the plan expires. Number 15. The most expensive myth is "I'll handle it later." This is the myth I warned you about at the start. It's the silent one, the one people don't even say out loud. They just procrastinate. And that delay can cost late fees, missed options, damaged credit, and peace of mind. The smartest move is usually simple. Face the problem early. Ask dumb questions, write everything down, and keep going until you clearly understand your next payment path. So what is the big takeaway here? Mortgage forbearance can be a lifesaver during a real hardship, but myths can turn that lifesaver into a money trap. The homeowners who do best are not the ones who know every mortgage term. They're the ones who ask early, read carefully, and refuse to make decisions based on fear. Which myth do you think confuses homeowners the most?